Hello everybody, my name is Silvio Vismara. I'm a professor of entrepreneurial finance at the University of Bergamo in Italy and visiting professor at the University of Ghent in Belgium. I'm honored to be part of this PDW on crowdfunding, broadening our site through theory building, and I guess that my value here is to bring the perspective of entrepreneurial finance. I conduct most of my research on equity crowdfunding markets where investors decide to become shareholders of the firm that they finance, and I expect this topic to attract more and more interest as equity crowdfunding markets develop in the United States. The first thought that I want to share is the need to focus more on the crowd of the crowdfunding market. So far, most studies on equity crowdfunding markets have focused on the role of team characteristics, firm characteristics. I think we should understand more how investors influence, how small investors in equity crowdfunding influence each other. One way to do so is to consider the theory of information cascades that was originally developed to understand the behavior of investors in initial public offerings. More broadly, the recent 2020 presidential address of the American Finance Association was devoted to social finance, and I think we can learn a lot from the theories of social finance. Second, I would like to see more studies focusing on the role of platforms. There is a big variance across equity crowdfunding platforms in terms of how they function, in terms of the level of disclosure that they require from firms and that they actually post online. So I think that more studies on the role of platform will be beneficial to our understanding of how crowdfunding markets work. And in particular, I think that the theory of network externalities that was developed or was used actually to understand the fragmentation and consolidation of the industry of traditional stock market might be useful to understand the industry of crowdfunding.
In order to address this question, let's ask ourselves first, what is unique about crowdfunding? What are some of the canonical problems in crowdfunding? Once we have a better understanding of these questions, we will be in a better position to advance theory building in the crowdfunding context. So here's a specific example. Crowdfunding research has made meaningful contributions to information economics. As we know, information asymmetry is a serious problem between project founders and project backers or investors. Why is information asymmetry interesting or important? Well, it's because on the surface, the internet helps reduce geographic barriers and decrease communication costs. But as a matter of fact, crowdfunding faces unique challenges because of lack of face-to-face or in-depth communication and participation of non-professional investors. So research has just suggested various mechanisms that can be used to reduce information asymmetry and mitigate problems that are associated with information asymmetry. These mechanisms include signaling, screening, contractual governance, and so on. But these mechanisms are imperfect at most. What's more, there might be some interesting interaction effects. And so in one of the papers that I worked on with Chris Courtney and Super Deep Data, we realized that there are various sources of signals and certification mechanisms. Well, some of these originated from the backers, others from the project founders. Furthermore, some of them reinforce each other's effects on obtaining crowdfunding, others offset each other's effects. There are many remaining questions. For example, is there a temporal dimension in terms of the strength of the signals and certification mechanisms. I believe that addressing such questions can help us advance theory building, but again, we need to look at what is unique about crowdfunding.
It's an interesting thought. I mean, there's some that I would say have been overused, or kind of we've experienced some exhaustion with them. So like signaling theory would be an example. Kind of signaling is a victim of its own success in a lot of ways, right? It seems very applicable. It seems very, in some ways, simple to apply. I think that has led the last couple years, to less enthusiasm about here's a crowdfunding paper that uses signaling theory. And I think that primary dynamic probably is still going to be happening. I do think signaling, there's still opportunity to, in crowdfunding, use crowdfunding as a context to explore how multiple signals interact, their subtraction, multiplication, have been covered in other areas, not a ton in crowdfunding. That might not really make it that much of a contribution. So probably instead of kind of the conventional approach of, interactions, it'd probably make more sense to take a broader approach, maybe multiple methods, and try to really get a feel for how the presence of one signal actually changes the interpretation of other signals. Because that's another thing that signaling, I would say we haven't really understood or looked at enough, is how do people really interpret and see signals.
Well, I think we've done a fantastic job in terms of contributing to various theories already. A lot of the research, not surprisingly, I think is focused on how entrepreneurs communicate in their pitches to prospective funders. And I still think that there's probably some ways that we can contribute in those areas to those theories like signaling theory, visual cues, impression management, persuasion theories, those kind of core communication theories that have not been fully fleshed out given resource constraints that now the crowdfunding platforms are allowing us to examine. For example, on crowdfunding platforms, entrepreneurs are pitching and they are providing a lot of rich data on different sorts of communication mechanisms all at once to prospective funders. And so now we can see how entrepreneurs can combine things like signals and visual cues, or signals and persuasion mechanisms together to attract funding, right? Typically, scholars have looked at IPO prospectuses or other sort of communication means where it's usually black and white text that's talking about signals, but not really providing that rich sort of context. You don't get to see the entrepreneur. You don't see necessarily the products. And so it's now these crowdfunding platforms are combining all these different elements. And so how these different elements combine is really interesting.
Now, looking at the theories from outside entrepreneurship and finance that could be applied to crowdfunding, I think a very interesting possibility is offered by the theories of social psychology. Especially, we all know that they have been applied with impressive results to finance, leading to behavioral finance. But this is quite interesting because in financial markets, the operators are expert decision makers, and they also use sophisticated instruments like algorithm and computational instruments to help overcome some of the biases of the human cognition. And on the other hand, in crowdfunding, the vast majority of the decisions are individual decisions made by lay people, by non-experts of financial markets, and with no help of algorithms. And so I think this offers a very interesting opportunity to import into crowdfunding some of the theories, like those of risk perception or loss aversion, or the use of heuristics, or the use of emotions and affect into the decision making within the area of crowdfunding research.
Crowdfunding contexts as well are interesting because you have different types of people that are involved. Here, it's a much more inclusive sort of setting than the typical funding context like venture capital, or that we get to see as clearly in sort of bank lending context. So, status related theories here, right? Status in terms of gender, race, age, or otherwise. The status theories could be used. Status expectation states. What are some of the other ones? Gender role incongruity theory. Those sort of theories can be applied and studied within this context as well. Something that we haven't seen as much, probably because of the availability of data, but I think something that we're going to have to push towards as well is understanding the funders and the differences of why different funders are drawn to crowdfunding pitches. Some funders might be drawn because they're friends with the entrepreneur. Some of them might stumble across something that they see an important social cause or a unique product that they'd like to fund, and they're drawn to the crowdfunding platforms that way. Or some individuals are just crowdfunding pitchers, crowdfunding funders, and so different funders are drawn to the platform for different reasons, and they fund for different reasons. And so why are different funders attracted to different pitches? How or why do funders, how do funders engage with the pitches? Are they looking at the video first? Are they reading the text? What are the salient elements that they are picking up on, and what are the differences across those individual funders that lead them to focus on specific attributes of those pitches?
What theoretical perspectives may be applied to explain crowdfunding behavior? Other than the internet as a transaction platform, another unique aspect of crowdfunding as compared with other forms of entrepreneurial finance such as angel investing and venture capital is that a lot more backers from different backgrounds, experiences, and expertise are involved. Some call this the democratization of entrepreneurial finance or investing. An obvious question is, what is unique about the crowd? How much do we understand the characteristics of the crowd? For example, is there any herding behavior? Crowds are comprised of individuals. How much do we understand the individuals in terms of their personality, cognition, psychology, and so on? So some of the macro psychological perspectives might help us address such questions. A question at a more macro level is, what is the relationship between crowdfunding and innovation? We know some of the innovations emerged from, or at least were accelerated by crowdfunding, including the Pebble Watch and numerous video games. Still, it remains unclear how crowdfunding promotes innovation and whether crowdfunding size and scope have anything to do with the innovation cycle. So can theories of innovation help us in this regard?
Crowdfunding is unique in the sense that there's very limited interaction between the entrepreneur and the funders. And I think, it's extremely rich presentation that the entrepreneurs present to the funders, but it's a limited interaction between the two. There's some feedback and such that can go on, but still very limited sort of interactions. And certainly those interactions are more text-based than in person and such. So there's going to be generalizability concerns from that standpoint. I think also, again, these are entrepreneurs at very nascent stages of development, and so you have to think about that as well in terms of generalizability. But, in terms of the limited interaction, you can also think about websites, company websites, entrepreneurs' websites starting out and how they present the ventures and such. You can think about Twitter feeds and those sort of marketing-based, social media-based marketing approaches where there can be limited interaction between entrepreneurs and their various stakeholders as well. And so those are sort of the contexts that you should be thinking about generalizing to, but at the same time, why generalizability? Why replication? I'm not sure that we necessarily need that. Crowdfunding is an extremely important sort of context where early stage entrepreneurs are getting funding, and so we should appreciate the uniqueness of crowdfunding. And for example, Greg Fisher's work points to important differences across contexts, funding contexts. So venture capital is very different than government funding, is very different than bank lending, is very different than business angels, is very different than crowdfunding. We should appreciate, as scholars, we should appreciate those differences, theorize those differences, and show how those differences then play out. So I think, generalizability is important, but at the same time, let's not go too far with that. Let's understand the differences as well across these contexts.
Last point on which I want to comment is a call for more replication studies. So far, most studies are based on one single platform. I think this is good. However, we are not sure, we're never sure whether results on one specific platform hold on different contexts. And as I said, there are large variances in terms of functionings across platforms. So I call for cross-platform studies, especially for investigating equity funding markets in the United States that have so far been largely neglected from the literature, and I think they are important to better assess the generalizability of the results of previous studies.
Greetings. I'm Douglas Cumming. I'm the Distinguished Professor of Finance and Entrepreneurship at Florida Atlantic University. I'm going to talk about crowdfunding post-COVID for the next 3 minutes. COVID will bring about many changes to the crowdfunding market. Perhaps most importantly is to begin in the middle of an intermediation picture, namely with the platforms. So platforms will have to change their due diligence activities significantly in the post-COVID environment. Much more focus will be on due diligence because there's a pronounced incentive for entrepreneurs to engage in fraudulent activities in a massive economic downturn. And any scandal that hits the marketplace is would have a tremendously negative, even pronounced negative impact in a crisis period, thereby increasing the regulatory pressure and also economic pressure amongst the platforms to not have any scandals on their platforms. We have a paper in the recent issue of the Journal of Banking and Finance on crowdfunding platform due diligence that shows some concerns with fraud and downturns, which is consistent with many other papers on fraud, and also the importance of due diligence in ensuring successful outcomes amongst crowdfunding campaigns across platforms. So that's going to be perhaps one of the bigger shifts in campaign management, platform management going forward. The second two types of shifts have to do with the entrepreneurs and the investors. So, from the entrepreneur's perspective, the types of projects that get brought forward are naturally going to have to be COVID sensitive. Simple things like, for example, if you consider exercise, the exercise market, cycling tremendously successful post COVID, whereas in person gym exercise completely decimated. Then the other, from the entrepreneur's perspective, is which angle do you want to take with crowdfunding? Do you want to go through, donations, rewards, debt, meaning peer-to-peer lending or marketplace lending, or equity crowdfunding? And on two angles, so first on the donations angle, there's significant opportunities if you mix social concerns that are currently pronounced, such as with Black Lives Matter and other current social concerns. You bring those together, that can have huge success. There's been tremendous outlier successes, for instance, of folks posting videos interlinking social concerns and harms that have been done with crowdfunding. Then, secondly, on the equity crowdfunding forefront, is in a similar vein in the venture capital market. Venture capital can be quite countercyclical, and so we would expect in a similar way, equity crowdfunding has tremendous potential in that space. It's currently countercyclical, uh, long-term investments that might get kickstarted through this economic downturn with equity crowdfunding. Thank you very much.
So I think one of the things that we're certainly seeing is that entrepreneurs are raising money for causes now that are very different from what we traditionally think of as the domain of crowdfunding. So traditionally, crowdfunding is used for the front end of innovation and to test the market and to test the early demand for new product or service. But during the pandemic, increasingly entrepreneurs are using crowdfunding to raise funds for survival. So I think some of the interesting questions that we can ask using the crowdfunding data from this era have to do with resilience, business survival, and overall adversity and the responses of entrepreneurs and the funding crowd at the times of adversity. Another thing that I think is happening with crowdfunding is that there are a lot of individuals who are using crowdfunding to raise money for causes that have nothing to do with entrepreneurship. So there's a lot of personal medical bill related fundraising going on, and also a lot of philanthropic fundraising that may not exactly fall into the domain of entrepreneurship. So I think one of the things we have to keep in mind when we use the data from this time of the pandemic in our research in the future is that not all of crowdfunding necessarily fits within the frame of entrepreneurship.
I think what COVID is going to do for crowdfunding as a phenomenon that affects entrepreneurs and businesses, and for our research on crowdfunding, on that phenomenon, is it's made donation-based crowdfunding probably pretty relevant kind of for the first time. Well, first time in my view. Entrepreneurship research largely has been concerned with funding that's provided in exchange for goods or services. That's the rewards-based crowdfunding, or equity. Unfortunately, equity is kind of not really taken off, largely due to all the regulations surrounding it, or debt, of course, loan-based crowdfunding. Donation really hasn't gotten much of a look in our disciplines. It kind of has somewhat more in other areas of science, but certainly not really in entrepreneurship. Largely because donation-based crowdfunding previously has been used by individuals seeking money to help with some catastrophic personal event. I think now we've seen businesses start to turn to donation-based crowdfunding, things like GoFundMe, for help supporting their businesses, keeping their businesses alive during COVID shutdowns and lockdowns. So I would suspect we'll see some research in that space in the next few next year or two?
So I think it is extremely interesting to study how the COVID-19 crisis could impact crowdfunding. The reason why it is so is that clearly the COVID-19 is a general crisis. It is global. But it is also general in the sense that it affects at the same time the entrepreneurs that may face liquidity constraint, especially from the classical instruments of debt financing like the banking system. But it also creates difficulty in using the liquidity for the investors, particularly the wealthy investors. And so all of these ingredients could definitely impact crowdfunding, particularly instruments like equity crowdfunding or convertible loans, real estate crowdfunding. So this offers interesting opportunities for the researchers to study how is crowdfunding being used amid the crisis, which instruments are going to be used more or less, or if the instruments of crowdfunding in those economies in which they are available or widely used can help boosting the recovery of the economic and financial systems, or whether the systems that have more developed alternative finance instruments are recovering more quickly than those that do not have them. And I believe that governments worldwide will also change some of the laws or unlock or unblock some of the crowdfunding opportunities in an attempt to boost the recovery. And this will also offer opportunities for the researchers to study the discontinuities in the law and therefore obtain causality inferences from what is happening in the market.
Yes, there's been a significant amount of research on crowdfunding in the last, 5 or more years. And so a lot of the low-hanging fruit is gone. I think that a lot of the communication-related theories like signaling theory, the contributions are getting a little bit more incremental. And so you have to start thinking about other ways to contribute. And so, but crowdfunding is an interesting setting because you have these entrepreneurs at very nascent stages that are trying to provide products, and this is maybe the first time that they're doing this. So how are the entrepreneurs, how are they preparing prior to the pitches? How are they organizing prior to the pitches? Right? We can learn a lot about how these entrepreneurs at nascent stages are organizing to get themselves ready for these pitches, and then how are they organizing during and after the pitches to deliver those products. So I think one of the best things that scholars can do going forward is to start surveying these entrepreneurs to understand what they are doing pre-crowdfunding pitch and post-crowdfunding pitch.
I think this area of research has potential to really contribute to our understanding of everydayness of entrepreneurship. So I think we're moving more and more away from seeing entrepreneurship as a research area that focuses on high-tech companies and fast-growing startups and unicorns and whatnot. And we are increasingly seeing that entrepreneurship is a way for individuals to overcome barriers and individuals with disadvantages to enter the economy. I think crowdfunding is a great area where we can see that all kinds of individuals, regardless of their background, can come together and support each other. And that is something that I believe will be highlighted even more in the future research questions that we will ask in crowdfunding, and really focusing on those barriers that impact the access of many people in the area of entrepreneurship and how crowdfunding can lower those barriers. I think that's one of the key areas where we're going to see more and more research.
Any of these questions is of interest for you, feel free to post or open a thread in our chat, and we hope we'll have an interesting discussion. See you next time. Bye.